You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest.
I got a bad feeling about this.
Yeah, so do I. I got a bad feeling about this, but, you know, he is back.
Welcome back.
Todd Halterman is back in the house. Welcome, buddy.
Welcome, man. Thank you for having me, bud.
Glad to have you with us. And I'm actually, Todd's back. Got to get out of the snow. So those of us that are here in Southern California, where we think it's cold, what'd you say, 3.5 feet of snow you've shoveled, Todd?
I've shoveled 3.5 feet of snow in the last week and a half.
I feel very bad for you. I know, although I do know that my son Mitchell spent a little bit of time this week actually shoveling water. So we got some rain. He works at Disneyland, so he had to do a little getting the water puddles off of the walkways and drying off the rides. But, you know, so shoveling snow, shoveling water. I'm not going to say what people say I'm shoveling, but that's a whole different story. And let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. International Tea Day. You know, I've gotten into drinking teas lately. Constant Comet, I think, is one that I like. My wife has turned us on to chamomile tea. And I'd take a little drink of chamomile tea, and 10 minutes later, I'm sound asleep.
Really?
I'm wondering if she's going to start giving that to me in the morning, so it mellows me out. But International Tea Day. Well, the other one I like is, what do they call it? Starbucks, a medicine ball. That's a good one. If you've got a sore throat or tickle in your throat, medicine ball from Starbucks. That's a good one. Let's see. Todd, I don't know if you're going to do this one today or not. It's also International Wear Your Pearls Day. So I'm not, I don't own any pearls, so I'm not going there. Cat Herders Day. I'm not much of a cat person. My dog doesn't seem to like the cats too much. Yesterday, we should have had Mark Schneider in. If you were listening to us yesterday, Protect Our Kids Now is the organization. Protect Our Kids Now. Today's Bill of Rights Day. So I'm not sure they even teach the Bill of Rights in schools anymore, but today is Bill of Rights Day. And having beaten anorexia, you know the direction I'm going today. Today is National Cupcake Day. Chocolate, please. No whipped cream, Levin? Okay, I get it. Okay, but National Cupcake Day. Let's see. Right by our studio, we're not too far from a place called Rockwell's. They make some great bakery items. Cupcakes there are amazing. I can sit here and drool all day. But they also make good martinis. And I'll just throw that in. I don't know about a cupcake and a martini. They don't seem to go together. Of course, martinis go with almost everything. Even not as we record right here at 9 o'clock in the morning, though. Maybe a little later. Hey, let's take a look and see what the markets are doing. I'm not sure I want to look early today, and I know it's been pretty volatile because I've watched the bond market. But the markets today, the Dow Jones Industrial Average down 777 points. S&P down 98. The NASDAQ is down 328. Oil's down $1.37. My screen just all looks red right now. Even the 10-year Treasury is down. Usually we see when the stock market goes down. Well, we'll see. We'll take a look at all these different things. We'll see what's going on here. Any news in the markets that we need to talk about today? Oh, yeah, the Federal Reserve. Jerome Powell.
I got a bad feeling about this.
So Jerome doesn't quite oh, yeah, Linda, you're right. I think Rockwell's is the best. I'm with you. So Jerome doesn't quite get it. So I don't know how many of you drive. Yeah, I drive. How many of you have a windshield in your car? That's for kind of looking forward. Right square in the middle of your windshield, near the top, there's probably a rear view mirror, significantly smaller than the windshield. Unfortunately, all Jerome Powell does is look in the rear view mirror. Now, when you're driving down the road, let's say you're just driving down Highway 5 or up Highway 5. It goes a long distance, so a lot of people can find it. And you're driving along. I'm not going to say you're going over the speed limit. So you're driving along at 65 miles an hour. And all you're doing is looking in the rearview mirror, Jerome Powell. What do you think is going to happen eventually? You're going to crash. It's pretty simple. So what is going to happen with the Federal Reserve, with what they're doing? It's obvious to anybody who's watching. There's significant trouble on the horizon. Why? Because we see all the things that are already happening in the marketplace. We already see that inflation is subsiding. Take a look over the last couple of months. If you annualize the last couple of months, we're probably right around 2 or 3%. You can't annualize it that way. That's not how it works. So the numbers are much higher. But if you look at the market, it's subsiding. Oil prices, which is the driver of a lot of this inflation that we've been seeing, it's coming down a lot as well. I told you yesterday, the Cass Freight Index, that's a very, very early on leading indicator of what's happening in the economy. Well, when the Cass Freight Index is showing that it's getting cheaper and cheaper to move freight by planes, trains, trucks, well, why do you think it's cheaper to move? Because there's more capacity. When there's no capacity there, well, it gets more expensive. It's supply and demand. They want to create more capacity. So now they're having to modify, and we're seeing prices, even in freight and transportation, coming down. We're starting to see that we're getting some labor numbers. We're watching that. The labor statistics numbers, they're coming down. So why is it that Mr. Powell can't see these things? Well, maybe he's got blinders on. Maybe he's sitting there looking in the rearview mirror. That's the problem. Maybe Mr. Powell doesn't know this very, very super secret website. Not the one that I tell you all the time, google.com. How about dailyjobcuts.com? Dailyjobcuts.com. They're saying that initial jobless claims unexpectedly tumbled to 3-month low. Okay, we're watching where these job cuts are coming from. We already talked to you a little bit yesterday about what's happening in California and our mayor, our governor, that has no clue about what's going on, where we're losing population, we're losing net worth, we're losing out to the states that he calls being run by idiots who have 4 times the growth that we do, Texas, Florida, and our governor is not smart enough to see any of this stuff. So between our governor and the chairman of the Federal Reserve who can't figure this out, now at least Mr. Powell yesterday made the comment that, you know, if you listen and put all the math together, he says they're only expecting another 50 basis points of rate hikes. And they're looking at 25 basis points at the next meeting, which is February 1st. What does that tell you about the meeting after that? Quick math, 50 less 25. That means there's probably another 25 basis point hike coming after that one. But then he says they're going to keep it here for an extended period of time. Why? Because he hasn't inflicted enough pain. Now, Chapman University on Tuesday came out with their forecast. They're always one of the top one or two forecasts in the country. Sorry, Goldman Sachs, Morgan Stanley, that you might want to just take a lead from Chapman. We're going to have a recession within the next 6 months. It'll be deeper than normal, but they're projecting a V shape, which means down quickly and back up quickly. We'll talk about more of that next week. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to chat with Todd Halterman, how to reduce taxes on inherited money. I didn't even know there was taxes on inherited money. We'll talk about it. Planning to retire, it could be time to make a move. We're going to chat about that and how to add rent payments to your credit reports. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva, they've got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now down 98.99 and falling. Let's take a look and see what's going on with the 10-year Treasury. That's down 6 basis points. Mortgage-backed securities down 8 basis points. We'll take a look and see why that's happening. But every day at this time, OB, MMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did loans lock at yesterday? Don't know the points, don't know any of that other information. I just know the amount that they locked at according to OBMMI, again, with their 35% market share. 30-year conforming, 6.308, up just a little bit. 30-year jumbo, 6.402, up a little bit. 30-year FHA, 6.339, up a little bit. USDA for the rural areas, generally with no down payment, 6.297, down ever so slightly. And the best loan on the market, the 30-year VA loan at 5.973, That one was down a little bit as well. So we're going to take a look at all these things, but we want to know, why is this happening? Anybody can give you the numbers if they know where to find them. But as anticipated, the Federal Open Market Committee, FOMC, hiked Fed funds rates by 50 basis points to a target of 4.25 to 4.5. This is up sharply from where rates were only 9 months ago in a range between 0 and 0.25. In their statement, the Fed said that ongoing increases would be appropriate and that they would continue their balance sheet reduction. The surprise was in the Fed funds rate outlook, where 17 of 19 members forecast a Fed funds rate over 5%. Ow! The projected terminal rate, or the highest the Fed funds will go in the cycle, increased by 50 basis points to 5.1 from 4.6. The market initially reacted negatively to this news because it signaled that the Fed intended to keep rates higher for longer than anticipated. Sentiment shifted during Powell's Q&A when he acknowledged that the, quote, inflation data received so far for October-November shows a welcome reduction in the monthly pace of price increases, unquote. Does that surprise anybody? Surprise. 6 months ago, we were looking through the windshield, not the rearview mirror, and we told you that that was going to happen on the November report, basing that on October data. The December report, which is November data, we've been telling you that for 6 months already. Unbelievable that Powell can't see these things, but then again, he's only looking in the rearview mirror. Initial jobless claims, which measures individuals filing for unemployment benefits for the very first time, fell 20,000 to 211,000, lowest level since September. Continuing claims and those that continue to receive benefits after their initial claim rose again, 1.671 million. They have now risen 9 weeks straight and are at the highest level in 10 months. This 10-month high in continuing claims points to a potential slowdown in the pace of hiring. Once again, there's no surprises there. Retail sales, this is what drove the market down today, decreased by 0.6% in November, which was weaker than estimates of a 0.2 decrease. Core retail sales fell 0.2%, which came in significantly under expectations of 0.8% gain. So at the holiday season, people are slowing down their purchases. Not a good sign for the market. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva got the programs and the products. You just need to make the call, 800-306-1990. Welcoming our good friend Todd Halterman is with us. Not giving any financial advice today. He just educates us. But Todd, I want to get from your perspective. I talk about it. I'm, as a certified liability advisor, I'm dealing with the right side of the balance sheet. And I know you do that as well, but you focus a lot of time on the left side with assets and tax planning. What are you seeing from all this stuff with the Federal Reserve going on from the investment side?
I'm seeing a lot of investors that have mutual funds that have lost significant amounts of money, about to get 1099s for capital gains they never got to keep. So there are many people in America right now that have mutual funds that have lost.
Back up 1 second, Todd.
Yeah.
Getting a 1099 for capital gains they didn't get to keep. That means they're going to have to pay taxes on something they didn't get to keep.
That's correct. Their portfolio lost money, but when you invest in mutual funds, these mutual fund managers have hundreds, if not thousands, of positions, and some of them are quite old and have a lot of internal long-term capital gains. Those long-term capital gains, when they sell those off to rebalance the portfolio, go on your 1099. Even though you may have lost 15% in the fund, you could get some substantial capital gains because this is the time when they sell assets and rebalance to stuff that's went down.
So they've got to rebalance at this time of year also, because every quarter they're rebalancing. And then at the end of the year, they've got to make their numbers look good, because their main purpose of the fund, contrary to popular belief, is they've got to make money.
Oh, yes.
Right? So they've got to make their fund look good at the end of the year, because there's going to be salespeople out there all year long trying to sell this fund. And if it underperforms, and Todd, talk about measuring the funds against an index. What does that all mean?
Well, I mean, the relative index is how much risk are you taking relative to an index that meets your risk level. And how are your funds performing against those indexes is how people measure the, I would call the success of the portfolio manager or the lack of success.
So if you've got a fund that measures against, say, the S&P 500, if the S&P 500 goes up, then I don't know what the numbers are. So I'm just throwing them out there, 10%, and your fund goes up 12, I got a good deal. If your fund only goes up 5, you might be looking to get out of that fund. Is that about it?
Correct. And in theory,
I'm a simple guy.
In theory, you want to get more reward than you take in risk if you're doing it right.
Now, before we get into what I really want to talk to you about today, Todd, I want you to go over a little bit about a scatter chart. And yes, I did have I worked at Merrill Lynch and I had all my licenses way back 150 years ago. But the scatter chart basically shows what were the winning asset classes each year.
Right.
And should I be putting my money in last year's winner or last year's loser, or what are your thoughts?
Well, my thoughts are to have a really good financial plan and that's why you make sure you're diversified, because if you look at that scatter chart, those places and placements change every year. And, in 2021, large cap growth was at the top along with real estate. But you'll see large cap growth at the bottom this year. And believe it or not, dividend companies are towards the top. Real estate is stayed at the top. Credit and fixed income's at the bottom. But it changes so fast, Ron. That's why you can't time the market. And if you're doing it right, you should have true diversification so you can get more of what I'll call the index average and taking less risk than what you're getting in reward.
And is in your opinion, is that the reason that so many people underperform the market in their retirement funds? Is they're chasing last year's winner instead of keeping that plan going that you're talking about?
Now, the answer is yes. And even Vanguard's got a study on that. And the why is people tend to try to time the market. I know a lot of people that have come in and they put their money in cash in July, and they didn't even get the 7% run up in July because they went to cash because of a bad June. Now they've missed this 10% bump since October, and they're still sitting in cash wondering when to get back in. You see, it causes paralysis. And if you have a plan and you know that your plan involves that your 15-year money is going to go up and down, don't overreact. It's just like in driving in snow. If you hit the brakes or you overreact, you're going to crash.
Maybe we need to talk to Jerome Powell about that one too. So, you mentioned something when we were chatting before the broadcast this morning that you're helping a lot of families reducing tax liability on inherited funds.
Yes.
Now, is that just something for the rich and famous, or is that something that, us mere mortals need to worry about as well?
Well, I'll give you an example. There's two different types of inherited funds. There's inherited funds that heirs or children get when mom and dad are not doing good health-wise and their health is starting to decline, and the family starting to plan for future medical expenses, and they're worried that mom or dad might blow through a lot of cash if they need some health care assistance. And so while you're alive, people get inheritance because mom and dad start transferring assets to kids in a way to get it out of their estate so they can try to get past that 5-year look back. So we'll call it a gift, if you will, but it's gifts while they're alive. Now, unfortunately, when a parent gives that gift away to a child while they're alive, the kids inherit that at the cost basis of which the parents got it. Whether it's real estate or mutual funds, I'll use mutual funds in this example. So if that's the case, there's a lot of mutual funds that mom and dad gave to them that have losses this year, that have long-term capital gains, and they are all going to pay tax on assets they lost money in. So we proactively approach it from an aspect of, why are you invested in it in the first place? What do you want it to do? And then we generally try to sell to record the losses and move it to an ETF or a different mutual fund that'll keep them exposed to the same marketplace. But now we get to record some losses to help offset those gains.
Sounds to me like there's a big case to be made for maybe you don't want to be owning mutual funds. But I want to talk to Todd Halterman about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Planning to retire? It could be time to make a move now. How to add rent payments to your credit reports and more. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. The replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Planning to retire? It could be time to make a move. If you're thinking about retirement or have already retired this year, you may be planning your next steps. One of your goals could be selling your house and finding a home that more closely fits your needs. Fortunately, you may be in a better position to make a move than you realize. Here are a few things to think about when making that decision. Consider how long you've been in your home. From 1985 to 2008, the average length of time homeowners typically stayed in their homes was only 6 years. But according to the National Association of Realtors, NAR, that number is rising today, meaning many homeowners are living in their houses even longer. If you are watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you see a chart that's actually showing how long people are staying in their homes. When you live in a home for a significant period of time, it's natural for you to experience a number of changes in your life while you're in that house. As those life changes and milestones happen, your needs may change. And if your current home no longer meets them, you may have better options waiting for you. Consider the equity you've gained. Additionally, if you've been in your home for more than a few years, you've likely built up significant equity that can fuel your next move. That's because the longer you've been in your home, the more likely it's grown in value due to home price appreciation. Data from the Federal Housing Finance Agency illustrates that point. And again, we've got a chart how home prices have grown over time. While home price growth varies by state and local area, the national average shows the typical homeowner who's been in their house for 5 years saw an increase in value by over 50%. And the average homeowner who's owned their home for 30 years saw it almost triple in value over that time. Consider your retirement goals, whether you're looking to downsize, relocate to a dream destination, or or move so you live closer to loved ones. That equity can help you achieve your home ownership goals. NAR shares that for recent home sellers, the primary reason to move was to be closer to loved ones, plus retirement planned a larger role for those moving with greater distances. Whatever your home goals are, a trusted real estate advisor can work with you to find the best option. They'll help you sell your current house and guide you as you buy the home that's right for you and your lifestyle. Don't forget, when you're doing that, the reverse mortgage, purchasing with a reverse mortgage could be a big benefit to you, because say you've got $1 million home here in Southern California and you sell that home, you cash out, you didn't have a loan on it, now you've got $1 million in assets. Well, maybe you want to go and spend $300,000 of it to buy a $600,000 home. I'm not giving you exact numbers here, but with it using a reverse mortgage, and you take the rest of it and you say, Todd Halterman, can you help me make money with this extra $700,000 I have? I bet I know what the answer would be. And it might help you enjoy your retirement a little bit more, do a little more traveling, maybe even set up a college fund for your kids or grandkids. Just thoughts there for you. If you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce them to us, and we'll put together this plan for you? That's the Real-Time Real Estate segment, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. So before the break, I was chatting about this concept with Todd Halterman. Todd shared with us how people are having to pay taxes on money they never saw in a mutual fund that's decreased in value. I mean, think about that. Chapman just said that some homeowners now have they don't have the equity that they thought they did in their homes because of what's happened in real estate values over the last 6 months or so. But here's the question that I have is, there are a lot of ways. Todd mentioned earlier ETFs. And again, we're not giving any financial advice here. Todd's just giving us ideas and education. If you want financial advice, give me a call at 800-306-1990. I will not give you any financial advice, but I'll give you Todd's phone number and his contact information. But my questioning here is a simple man. Why would I want mutual funds? And I guess in our 401ks, that's about your best option, unless you have a self-directed IRA. But Todd, it seems to me there might be better solutions than a 401k now. If I've got to pay these fees and taxes and all that, what do you think?
Yeah, mutual funds are basically the third best way that I know how to invest. They can be necessary.
Now, don't tell me you only know three.
The third best, I said.
Well, that's what I said. And you know three, so that means it's the bottom.
Right. So, but basically, it also is up to an investment manager who's building portfolios. That sometimes there's a style that they would prefer mutual funds for various reasons. But by and large, the industry has gotten away from a lot of mutual funds in favor of exchange-traded funds, unit investment trusts, and then, of course, individual stocks and bonds themselves. So mutual funds in the fixed income market right now have been almost necessary for broad-based diversification, because the fixed income market is just horrible right now. But by and large, if somebody comes into me with a mutual fund portfolio, the first thing we talk about is the inefficiency of them, how to lower their expenses, how to increase their reward for the risks they're taking, how to lower their tax bill at the end of the year by not having the mutual fund. So there are a lot of beneficial impacts to changing the strategy of which you manage your money, but you really need to know what you're doing.
And that's a key thing. And so there's a couple of things I'm unpacking here, Todd, from what you're saying. Number one, there's no possible way for me to live my life. I lead a lending team. I run a radio show. I've got family. I've got a grandson. How do I run my life and understand all there is to know about investing on par with somebody like Todd, who doesn't run a radio show, doesn't lead a lending team? Oh yeah, he takes all that same time and focuses on learning the financial world. Right? So the whole idea here is, if you're a plumber, if you're an electrician, if you're a truck driver, you're doing that because you're good at it. Well, Todd does what he does because he's good at it and he studies that craft. We can't compete. I can't compete with Todd, even though I had my licenses, some of the same ones Todd has. I couldn't compete with what he does right now. It's not possible. Am I on track, Todd?
Oh, 100%. It's even Vanguard has done studies on the effectiveness of people getting help, real help, as opposed to doing it themselves. And an average investor that's getting help makes 300 basis points more per year than somebody that's doing it themselves. And 300 basis points is an average of 3%. But if you consider the average investor is making 5 to 7, that means they're going to be making 8 to 10. That's an almost 30% increase in effectiveness.
So I'm gonna make this real simple because I am a simple man. So let's say that I'm making 6%. That means my money, as a self-directed, the rule of 72 says I'm going to double my money every 12 years. At 10%, I'm doubling my money every 7.25 years. Just think about that by itself, right? So my say $100, if I direct it myself, is $200 in 12 years. Same $100 is almost $400 by giving it to a professional. Not quite, but it's close enough for a simple man just doing math in his head on radio. Think about that. What about with your retirement fund? Your retirement fund might have $100,000 in it, and you manage it yourself to get $200,000, or share it with someone like Todd and put together a plan and have $400,000. Maybe say call it even $350,000. That's the bottom line. Now that doesn't even talk about one intangible that we can't measure. When the market is as volatile as it is right now, and you've got somebody like Todd managing and guiding you as a tour guide, so to speak, do you think you might be able to sleep better at night? Because you don't have that stress. Because Todd's already told us 17 times today in less than an hour. The whole idea is work the plan. And over a long period of time, the plan works. Right? Now, does that mean you're going to worry about what happened in the market that is down 900 points today, or give or take? I'm going to suggest, other than, Todd, how often do you meet with your clients?
Well, about once a quarter for my actively managed clients, and then generally twice a year for people that are less active, or just really truly in the beginning of accumulating. But the reality is, Ron, I'm reviewing people's year-end statements right now, and most of my clients are experiencing being even or up 4 to 6% in the last 12 months because of that diversification.
Yeah, and so it used to be that you just had to diversify based on asset class. That's kind of gone out the window anymore, isn't it?
Yeah, if you're not invested in private equity, invested in banking, invested in real estate, invested in commercial paper, and using some insurance trusts to date for downside on the fixed income market, you're really missing the boat. And most people don't know how to access some of those markets or how much and what's the balance. So I think the biggest value I offer to folks coming in brand new, whether they're doctors or they're plumbers, is teaching them how to not invest all their money in the stock market. I have clients that love owning fast food restaurants in their portfolio, in their IRA. I have folks that love owning apartment complexes or industrial buildings like Amazon warehouses. So people just get stuck in the minutia of investing all their 401k or IRA in the stock market. You don't have to.
Well, I think part of that becomes an issue, as I mentioned earlier. Why do we invest it in the stock market? Well, it's simple.
That's what we're trained to do. Well,
yeah,
that's the only
what we
option
know.
we had. Yeah.
Yeah, that's what we know. I mean, we know the stock. I don't know how to get these double-ended funds that Todd talks about, or where you can protect yourself from the downside. If you and we haven't talked about it today, so you didn't miss anything, but you can go back in our archives where Todd has talked about that. But do I know how to find those things? Absolutely. I call Todd. You can do the same thing. Give me a call. I'll put you in touch with him. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. How to add rent payments to your credit report. yes, you can do that. We'll talk about it when we come back. You're listening to Ron Siegel Radio. Give me a call anytime, 800-306-1990. We will be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. Linda, I see your message. We will get to that. I'll ask Todd that in just a minute. So here's the question today. Your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? How to add rent payments to your credit report. Since 2014, FICO has included reported rental data in all versions, FICO 9 and FICO Score 10 of its scoring models, meaning that paying rent on time could help improve your FICO score. But many landlords do not send their tenants' rental information to the credit bureaus. Fortunately, it's becoming easier and more common to do so. And here's how you can do it. First off, why don't landlords report rent to the credit bureaus? Like creditors, landlords aren't legally required to report their tenants' monthly rent payments to the three major credit reporting agencies. And for the landlords, the process often requires additional costs and effort. Also, while a rent payment is similar to a mortgage payment in terms of your budget, you're technically borrowing money, so it's been a relatively recent addition to credit reports. However, the motivation for landlords to report is becoming more clear. Not only does rent reporting potentially help landlords screen tenants based on their rental history, but it can also encourage tenants to pay on time to avoid negative marks on their credit reports. How to get credit for on-time rental payments if you pay your rent on time? Here are a few different ways you can have that information be considered in your FICO scores. Talk to your landlord. As options for reporting rent payments improve, 27% of property managers who are aware of the practice do so, according to a recent report from TransUnion. So before you consider other methods, reach out to your landlord and ask about their reporting policy. If they were unaware of the option or have considered it, you may be able to share how the practice could benefit their business by incentivizing on-time payments and potentially even giving them an advantage over other landlords in the area who don't offer reporting. Before talking to your landlord, you can also review your credit reports to confirm whether or not They're reporting your monthly payments. Cleanall3.com, cleanall3.com. Research reporting services. There are several different reporting services that can help you get your rent payments added to your credit reports. Many charge a fee, so evaluate carefully. Experian Boost, this is a free service, allows you to add rent payments as well as utility payments and streaming subscriptions to your Experian credit report by linking your bank account. Pinata, renters can download the free app and get their rent payment reported to TransUnion at no additional charge. Additionally, property managers can partner with the company and offer reporting to all 3 credit bureaus for $4 a month. Rent Reporters for a $95, $94.95 sign-up fee and $9.95 per month. Rent Reporters will report your monthly payments to Equifax TransUnion going back 24 months on an ongoing basis. The company is also planning to report to Experian soon. Rental Karma with a $50 setup fee and an $8.95 per month. You can get your ongoing rent payments reported to Equifax TransUnion and also going back 24 months. You can also add a spouse or a roommate for a one-time fee of $25 and $50 after that. Level Credit for $6.95 a month. Payment Report is another one for $2.95 a month. Depending on your situation, consider each of these options to determine which one is the best fit for you. If you want more information on this or you want the full report, give me a call, 800-306-1990, 800-306-1990. We're going to continue our conversation with that. That's your Credit Matters segment brought to you by CreditSanitizer.com. Continuing our conversation with Todd Halterman. Todd, we got a question here. Preferred home. Why won't it show up? There it goes. Preferred home brokers real estate. Is it ever too late to switch financial advice for someone in their mid-70s?
You know, that's a great question. Oftentimes, most people that I work with, I've changed their advisors between 62 and 75 because the way that the advisor they'd been working with forever has been managing the money has been for growth, not for income. And the way that you manage asset allocation and investments for income is completely opposite of the way that you manage assets to grow it for retirement. And so oftentimes folks in their 70s are looking for a specialist who understands inheritance, understands healthcare protection, asset protection, tax mitigation, gifting, estate planning, working with accountants. It requires a lot of extra work. And if I could just be candid, a lot of the wirehouses aren't suited for that type of administration or the extra work. They have thousands of clients. They don't see all of them all the time. They don't have the time to do full-blown financial planning. In our practice, our planners don't have more than 150 households at any given time because we're doing real planning, and that requires a lot of extra work. We're not just managing investments. So the answer is yes, it happens all the time, and it's because the parents want a specialist that will take time with them, much like a good doctor, rather than just being a number, going in and seeing a spreadsheet or an asset allocation model and then going out and not understanding how to use their money.
Yeah, that's a great advice there, Todd. Thanks for answering that question. The big issue is going to be a lot of different parts of that too, because one of the things that I know Todd and I have done within a lot of the seminars that we've done together, and I've learned a ton from this, is talking about how to. We've used it for a long time, the terminology of disinheriting the IRS.
Yes.
Right. There's a lot of ways that the IRS is getting more than their share. And
let's go back to the inheritance question. There's 2 ways to inherit money. And a lot of folks today, one of the biggest assets they inherit is an IRA. Now, let me do a real simple exercise for you, Ron. $1 million IRA handed to 2 kids is $500,000 each, right?
Right.
Wrong. Because child A already makes income and has income, so when they receive $500,000, they get $300 because $200 of it goes to the IRS.
Wow.
Child B, they make income and have income, so when they get their $500, they're going to keep $300,000 because $200 goes to the IRS. So you tell me the IRS gets $400,000, the 2 children each get $300,000, and those parents never planned on giving 30 to 40% of their life savings to somebody they don't even like.
Wow. And now what about the does that not fall under the exemptions, Todd, that you have in giving?
No, and IRAs, when they pass over to family, they get it, but they have to get it out of the IRA within 10 years. Okay. But they get it and then they take money out. It comes out at the top of their tax bracket. We have certain ways that we inherit IRAs for families, and we use IRA trusts, and we use them so people can control their tax and pay no tax when mom and dad pass away. When they get that IRA, we can show them how to wipe out a lot of the tax and control when they take that tax and how it's paid. But if we can do it and control it, you can definitely eliminate or mitigate most of it.
Now, does that have to be done while mom and dad are with us, or can that be done? Can the estate handle that after the fact?
Well, it's beneficial to handle it ahead of time for a couple of reasons. I won't go into detail due to time. It is ahead of time, but generally, a lot of folks don't approach this type of planning because they're afraid of somebody they're having to pay. They don't want to pay the accountant for the hourly rate. They don't want to come in and pay me because they're afraid they're paying for something they're not going to get something in return. But sooner or later, these families have to trust somebody. And if they wait till they're in a stressful, dire, urgent situation because somebody's already died or they're getting ready to, then you're going to make mistakes.
Yeah, think about that. I'm not going to even ask you here again. It's not part of our conversation. But my guess is that you got to have it's not going to go in your example there. That's certainly not going to have a $400,000 consultation bill. Yeah. Right? I mean, it's going to be significantly less than that.
I know my average retainer on doing a program like that is around $1,500. So people will trade me $1,500 for $400,000 in tax savings all day long, Ron.
Yeah, that seems to even a simple guy like me can figure that one out. That's really that's what in one of the commercial guys out here. That's what we call a no-brainer.
Yeah, and
so
people just want help. They want help, but they want help they can trust, Ron. And unfortunately, there's a lot of my peers out there who don't really specialize in it. They call themselves financial advisors or financial planners, but really they're investment advisors wanting the deposits to manage the investments. And the other 5 pillars, whether it's life planning, income planning, tax planning, legal planning, risk management planning, those all go out the window because it requires additional work.
So how do you deal, Todd? Because I know that you've got to deal with this, and I know we don't have a lot of time left, but I hear a lot of every financial planners, CPAs, lawyers, realtors, lenders, we're all basically entrepreneurs. And if I've learned one thing about an entrepreneur is we all know the answer to everything. Just ask us. So if I come to you and I've already had a CPA and a lawyer and a estate planning person, how do I deal with the egos? Well, the CPA says, well, I'm going to drive the ship. And the financial planner says, I'm going to drive the ship. And the attorney says, I'm going to drive the ship. And I'm the slum, the guy that knows nothing, and saying, who do I listen to? How do you manage all those egos to get to a workable plan?
Well, a lot of people bounce from professional to professional and get further confused the more that happens. And most of those professionals don't actually talk to each other. My experience says somebody's got to be real and get in front of those accountants, attorneys, and financial people and say, are we focused on the client or are we making it about us and our ideas? And I simply tell folks all the time, keep it simple. Make sure you understand what you're being told to do. And if you don't know how to drive the car, stop the car and find out why you don't know how to drive the car. But I step in all the time and I ask questions about, well, why don't we consider this? Or could they consider this? Or would they want to look to do this? And instead of telling them, or instead of me embarrassing them by showing somebody they're wrong, a lot of times I'll call them behind the scenes and I'll say, hey, listen, when we meet again, can we consider talking about this? Would you look into this and tell me how you feel about adjusting this plan? Because this looks to me to be more effective. Then I usually find that I'm very aligned with that accountant or attorney and do more business with them.
Yeah, and in putting together these teams, that's the best thing. And I've shared many times, I'm going to throw this out to everybody listening to me right now. If you have a great financial planner, on a scale of 1 to 10, you can't use 7 because that's a cop-out. So if you got a 9 or a 10, I'd love to know their name because I probably know some people that can use them. If you do not have a 9 or a 10, let me know that too, because I'll put you in touch with Todd Halterman because he is a 9 or 10. He's a 10 right there.
Thank you.
I've talked to him. I've watched him. I've sent people to him. Everybody that I know loves the work that he does and the guidance that he provides. So I'm more than happy to put people in touch with him. But I want to say the same thing about your CPA, your lawyer, your estate planning person, your insurance person, realtor. If they're 9 or 10, I want to meet them. If they're not, I want to introduce you to somebody who is a 9 or 10. Is that fair? Simple ask, doesn't cost you anything. My other ask all the time is to set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Lovin, who's engineering us today, and of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Just push me over the limit. I'd like to call him something. I think I'll just call it a day.